Hello everybody, Dan Lucas here from Credo, and this video is about the Trump indictment. So they're paraphrasing it out in the public. I felt compelled to give this an objective kind of read over and kind of explain to everybody what it looks like from the perspective of someone who's both a CFO and CPA. So I've done both tax work, and I've worked as a CFO and a controller. Done a lot of other type of accounting work in privately run companies, obviously out of the public sector. And I was reading through this, and I was thinking to myself, from both a tax perspective and from a CFO / controller perspective, that I doubt most people understand a lot of the stuff in here. That has nothing to do with anybody's intelligence level, and it is in English, and so, I know that everybody can read, but I can tell you that I feel like I can read this a little bit differently than other people based on my background, and can give some insights as to what this thing actually is. I've seen some content online that really is either people are being vague about it, or they're not really sure what this is or what it means or what's actually here. I can tell you that some of it, it could be an issue. I mean, there's some technicalities here, and so we'll kind of walk through that. But what I wanted to do was just kind of walk through this. We have timestamps on the video, and so I don't want to bore you to death with this stuff. But if you want to know what this stuff actually means and what's actually going on here, I'm just going to give you my opinion and my interpretation based on my experience as a CFO, controller, and tax professional. So let's dig in. All right, so first of all, when we look at page 1, we know that this is the state of New York coming against the Trump Corporation. There's several different corporations here. It looks like, you have one that's sort of an operating one, and you have another one that does all the payroll. That's not unusual. And then you have Alan Weisselberg, who's the CFO. Definitely not unusual for a CFO to be named in something like this for a corporation, okay? But from what I can tell, to me it looks like it's really the corporation that's being indicted, okay? So that happens ever so often, and a lot of times they end up paying fines, et cetera, so we'll see. Let's read through this. But obviously grand jury indicted here, and it says that they're accusing them of scheme to defraud in the first degree, violation of penal law 190.651B. I don't really know. I'd have to go read that law. I'm not a lawyer, but the first page and second page looks kind of just technical to me. It's just kind of explaining the background of the case, or background of the situation, and just giving some, I don't know, I guess setting to the entire thing and some context. It goes in, when you go on page 3, it talks about that this guy, Alan Weisselberg, he's the CFO. He's been with the family since 1973. Okay, that's a long time. Served as an accountant, comptroller. I hate that word, comptroller. That's a word typically used by people in the public sector. I use the word controller, but when I read comptroller, I start to think, well, this is probably somebody that has spent most of their life in the public sector, or just grew up having it called comptroller. Typically what I think is comptroller is in the public sector. That's the term used, and controller is the term used in private sector. So anyway, maybe they just did that to irritate him, I don't know. But he's been there since 1973. So to me, that means he probably was, came in as an accountant, made it all the way up to CFO. This isn't somebody that just came into the organization. This is probably somebody who has been like a family member to them, okay? So this is not somebody that just came in recently, been there a long time. And it says he has authority over everything, blah, blah. They're giving more sort of context to everything. Says he's a high managerial agent of Trump Organization, Trump Corporation, Trump Payroll Corp. I'm surprised there's not more entities in here. I'm assuming it's way more complicated than this as far as entity structure, but anyway, now they go on to something called the scheme, and this says beginning from at least 2005 to on or about June 30th, 2021, the defendants and others devised and operated a scheme to defraud federal, New York State, and New York City tax authorities. So they're claiming there was intent here, and it's like conspiracy as well. That's the way I read it. Purpose of the scheme was to compensate Weisselberg and other Trump Organization executives in a manner that was quote-unquote off the books. I don't know what quote-unquote off the books means. To me, that means that they're accusing him of receiving cash or something and then just giving the cash back out, and that way it never, no money ever hits the books, so to speak. So anyway, the beneficiaries of the scheme received substantial portions of their income through indirect and disguised means. I'm not sure I understand what the difference is between indirect and direct. Probably just something they're using descriptive, but it's not a formal term generally used in financial jargon. Now they're saying it was compensation that was unreported or misreported by the Trump Corporation or Trump Payroll Corp to the tax authorities. Okay, it's a pretty general statement. The scheme was intended to allow certain employees to substantially understate their compensation from the Trump Organization so that they could and did pay federal, state, and local taxes in amounts that were significantly less than the amounts that should have been paid. Okay. Let's read on and see what else they say. The scheme also enabled Weisselberg to obtain tax refunds of amounts previously withheld and remitted to federal and state tax authorities. Okay? So, further, the scheme involved the failure of the Trump Corporation and Trump Payroll Corp to withhold income taxes on wages, salaries, bonuses, and other forms of compensation paid to certain employees. Okay? The scheme also allowed the Trump Organization to evade the payment of payroll taxes that the Trump Organization was required to pay in connection with employee compensation. Okay, so in this paragraph here, things that jump out is, I don't know, it says he was able to obtain refunds of previously withheld money. I mean, if you have money under withheld or over withheld on your paycheck, you're going to get either a refund or owe some taxes when you file a return. So that's not necessarily atypical. I mean, if they could prove that he had intent to do something like that, I guess that makes sense. But it wouldn't make sense for somebody to, I guess it wouldn't be logical to, if you were trying to funnel money or something, that you would pay the tax in and then wait for a refund to come back. I mean, typically if somebody's trying to launder money or something, and they said it was off the books, so if they're trying to launder money, you wouldn't do it in the form of paying it in tax and then getting a refund back. Okay, that seems a little hard to grasp. But let's see. Also, he was trying to evade the payment of payroll taxes that the Trump Organization was required to pay. So, in this last statement here, and this is the top of page 4. Sometimes, the definition of compensation paid to somebody, and maybe expense reimbursement, or whether it's 1099 income, W-2 income, et cetera, or they're getting gifts or other benefits, it does get into a very sort of gray area, especially with the IRS or other tax authorities. And what it revolves around is people getting benefits or compensation or different forms of compensation, whatever the taxing authorities consider to be a form of compensation. If it's not W-2 income, if it's not paid as employee income, that less payroll taxes are paid. Okay, and so sometimes they do look into some of that stuff, and they do catch people and say, hey, because you didn't pay this as W-2 compensation or wages, there's payroll taxes that you didn't pay but should pay. Okay, so we need you to go ahead and reclass that to W-2 compensation. One thing I will say is that when you get above a certain amount of W-2 compensation, employee compensation, payroll taxes go way down. But this is, and that's not a very high bar. It's like a little over 100,000, and so I'm sure this guy makes more than that. Or a lot of these people make more than But I'm sure that the payroll taxes, part of it is for New York State, New York City, which they talk about later. So they're saying that they were evading these taxes. It could be that their position is they should owe these taxes. Now, whether they committed a crime and then did it with intention, that's a whole other ballgame. I mean, I can tell you that intentionally and committing a crime and conspiring to save a little money on payroll taxes, I don't know. It seems hard to believe that somebody who's probably done well off, who's been with the Trump family since 1973, would get involved in some conspiracy to save a little bit of money. It's not much. Okay, moving on. So, go to number 5. One of the largest individual beneficiaries of the defendant's scheme was Alan Weisselberg. During the operation, the defendants arranged for Weisselberg to receive indirect employee compensation from the Trump Organization in the approximate amount of $1.76 million. So, I guess what they're saying is, it started in 2005 and went to 2021, so over 16 years. So it looks like about $100,000 a year. They're saying he received in kind of benefits of being part of the Trump Organization, or things were paid on his behalf, et cetera, et cetera. They're saying it should be called compensation. At least this is the way I'm reading it. And over that period of time, it sounds like a big number, but every year, if an executive gets $100,000 of things paid for them and expenses, that's not atypical. Okay, technically, if you do it the wrong way, or if it's the wrong type of expenses, you don't report it. Yeah, I mean, you could get dinged for it. But that's not that large number. It's not an abusive number. Okay, I've seen way higher than that. Let's see. As described below, the defendants enabled Weisselberg to receive this compensation in ways that enabled the corporate defendants to avoid reporting to the tax authorities, and that did not result in the withholding of income tax by the corporate defendants. Okay, again, that's a really, well, I mean, that's a long way to go. To really not save that much money. I would be thinking if they were committing a crime that they would be doing it for something that was a lot bigger money, or something a lot more discreet. It says Weisselberg then concealed the compensation from his tax preparer and intentionally omitted it from his tax returns. Gosh, I mean, so when somebody gets, a W-2 that shows their compensation, and you give it to a tax preparer, they're going to use the W-2 for all intents and purposes that was provided to you from the corporation. To say that he concealed it, I don't know. And to say he intentionally omitted it from his tax returns, I mean, we'll see if they have the evidence on that. I mean, but I don't think it. A tax preparer wouldn't be looking for it or finding it, and then somebody actively trying to cover it up so they can't find it or something. It doesn't really work like that. It's more of he was receiving some benefits. I'm sure the tax preparer didn't know about it. They may have sent him a questionnaire, gave him a bunch of things to state that he doesn't know of any other income, he hasn't reported, et cetera, et cetera. Anybody that has their taxes done by other people probably fill out the same thing, and I guess they're calling that concealment. Again, I'm not sure. I'm just reading this document and giving you my impression. It says that he concealed for years the fact that he was a resident of New York City who was required to pay New York City income taxes. I obviously don't know if that's true, but I do see a lot of times where this whole residency thing can become kind of a hairy situation. So I don't know. This might have some teeth in it. During the period of the scheme, Weisselberg therefore evaded approximately $556,385 in federal taxes, approximately $106,568 in state taxes, and approximately $238,159 New York City taxes. And then he falsely claimed and received approximately $94,902 in federal tax refunds and approximately $38,222 in state tax refunds, to which he was not entitled. The math looks like it makes sense on here, based on the $1.76 million. I think what we can learn from this paragraph is New York City is really expensive to live in. Wow. That's amazing that New York City taxes are double state taxes. If you have a comment and you live in New York, please put it below. But that is really high. Okay, so maybe there is some incentive there to not pay taxes there. Again, in perspective, this is, I would think that this is pennies to these guys, but okay. Let's see, falsely claimed, blah, blah. Now, one thing you got to keep in mind too is they are, they're charging the CFO, etc., with these things, but I doubt he's into this level of detail. Okay, I'm not saying he's not responsible for it, but I doubt that he's in this level of detail on things. I mean, CFOs typically do not get involved in payroll things. They don't get involved in this withholding things. I'm sure they pay millions and millions and millions of dollars to outside accountants, inside accountants that are supposed to be taking care of this stuff. If he co-conspired to force people to do these things, that's pretty odd. And the only reason I could see that it would sneak by is that it's just immaterial. So the outside accountant wouldn't even bother looking at it because the amounts are small, probably in the scheme of everything. But anyway, I doubt the CFO is this involved or at this level. So, although responsible for it, they're gonna have to show that he did it on purpose and co-conspire with other people. So we'll see. Okay, next section is Trump Organization's payment of rent, utility, and garage expenses for Weisselberg's apartment on Riverside Boulevard and Weisselberg's evasion of New York City income taxes. Okay, it talks about beginning in March 31st, 2005, Trump Corporation maintained a lease for an apartment on Riverside Boulevard, New York, New York. The building, one of several buildings on the west side of Manhattan known as the Trump Place, was not owned by the Trump Organization, but the Trump Organization paid the lease. Okay, so they're saying that or what I'm reading here is that they basically had a corporate apartment for him, okay, and instead of owning it, they were renting it, okay. Don't know why, doesn't say why. It's not atypical for corporations, large organizations to have corporate housing for various employees or executives, etc., etc. From the beginning of the lease through June 30th, 2021, the sole residents of the apartment have been him and his spouse. And Weisselberg maintained the apartment as his permanent place of abode. Okay, so if that's true, I mean, there could be some tax issues here. If you are maintaining a sole residence somewhere and a company's paying for it, under certain circumstances, it can be deemed compensation. And that is compensation to the person that's living there. There's a lot of rules around what can be considered compensation and what is an expense of the business. And it's at the, it's like the benefit test of it's at the pleasure of the business, and it's not really what the person living there wants. There's a lot of rules around that, which, that's beyond the scope of this. But if they were living there in New York City as a primary residence, receiving that money, not paying the New York City tax, etc., etc., I don't know. I mean, it could be a problem. Again, it's a real technical area, and we'll see. I mean, I would have to think they got some counsel from the outside on that and thought it was okay. So we'll see. All right, next section. Again, they're saying beginning in 2005, and as a part of the scheme to defraud, Weisselberg signed rental checks drawn on the Trump Corporation's bank account, and the checks were sent to the managing agent for the apartment building on Riverside Boulevard. Okay, that's not atypical. He's the CFO. He would sign all checks no matter whether it's for him or not. I mean, I've had people in my company, and I've had them make changes to their own payroll. I've had them write themselves, cut themselves checks, et cetera, based on a need basis, and as long as it's within our internal controls. So people that are taking care of money, it's not unusual for them to sign checks, et cetera. It doesn't mean that there's necessarily anything wrong happening from that sense. Similarly, Weisselberg and others directed the Trump Corporation to issue checks to pay for Weisselberg's utility bills. So they pay for his utility bills, including payments for electricity, telephone service, internet, and cable television service. During this time, Trump Corporation also paid for Weisselberg's monthly garage expenses. Okay, again, this is not atypical for a corporation to do this for key people in their company. There are tax rules around it where certain times there's things that are deemed compensation, and what they're saying here is not only were these things not classified as compensation. They did it in, well, they keep talking about the whole group, so it's a conspiracy, but they were colluding to intentionally not pay taxes and take money and make more money and take it home. Okay. At all relevant times, the payments of rent, utility, garage expenses were employee compensation and taxable income to Weiselberg. So that's kind of a key statement. So they're saying they're making their claim right there and saying, look, these things that the companies were paying on his behalf are employee compensation. Now they're going to have to argue that, I would think, and show why, according to law. But that's not an unusual claim for a taxing authority to make. Okay. These payments were not booked in the Trump Corporation's general ledger as employee compensation, but were instead labeled and deducted as rent expense in the general ledger. Again, that's not atypical. Again, it could be they're claiming that it's not rent expense to the company, and it should be compensation to this person. You know, I don't know if that's technically right or wrong. It's not atypical that there would be some jawing back or arguing back and forth about this. It's kind of a gray area. So I haven't seen anything that would constitute something off the books. Okay, they did put it in the general ledger. Just because they didn't put it as employee compensation doesn't mean that it's off the books. Okay, because they did put it in rent expense. Okay, so it's not like they're hiding transactions. At least to this point, I haven't seen that. Okay. However, for certain years, the Trump Organization maintained internal spreadsheets and tracked the amounts it paid for the rent. Okay. Now, there's a lot of talk in this entire indictment about internal spreadsheets where they track things. And they're claiming that this spreadsheet is named or titled, at least implying it, compensation. Okay. I don't know if that's true, but if that's true, that's probably not in favor of Weisselberg or the Trump Organization. Okay. That would be unusual, and again, these amounts are so immaterial to the overall company. I'm sure that would be, that's unusual. I'd be surprised if somebody would keep a spreadsheet like that and call it compensation, but could have been a staff member that called it compensation because that's what they thought it was, and that's there. So that, that's probably not going to work in their favor. He also says the Trump Organization reduced the amount of direct compensation to account for the indirect compensation that he received in the form of payment of rent, utility bills, and garage expenses. So that is a strange statement, because basically what they're saying is, if somebody made, let's say, $200,000 of salary, and they paid, $5,000 a month for your rent to put you up in a corporate apartment, that would be $60,000 a year, right? So what they're saying is he received $200,000 of compensation, and then they took the 60 and minused it off the 200 to get 140. That's strange. Typically, I would think that what their argument would be is that it shouldn't be $200,000 of compensation. It should be $260,000 of compensation. So they increase it from 200 to 60. So it might just be a misunderstanding. I don't know, but it says that they reduce. This sentence doesn't make a lot of sense to me. Then it goes on to say the indirect compensation was not included on Weisselberg's W-2 forms or otherwise reported to federal, state, or local tax authorities. That does make sense, at least in the fact that they're claiming that that's what they did. And no income taxes were withheld by the corporate defendants in connection with the indirect compensation. Okay. The compensation amounts, I'm on page 6 now, reported by the defendants to the tax authorities, upon which income tax withheld, included only Weisselberg's direct compensation. So what they're saying is all of the money he received in salary, all the direct compensation, most of his compensation, they're calling direct compensation, and it was included and reported. What they're saying is these other things that the organization paid for that he benefited from, they're saying it was not included and considered compensation to him, and it should have been. Okay. That seems to be the general theme of all this. So they're separating things between indirect compensation and direct compensation in that sense. Weisselberg intentionally caused the indirect compensation payments to be omitted from his personal tax returns, despite knowing that those payments represented taxable income. Okay, so intentionally caused, I don't know what that means. If that's true, I mean, that would mean they would have some sort of documentation or evidence that he specifically directed somebody to omit it from his personal tax return. Personally, that seems a little goofy for someone like him to do something like that and not know that that's going to come back and bite him, and it's not that much money in the scheme of things. So, but I've seen people do weirder things, so who knows? But that just seems a little goofy. Because of the indirect compensation in the form of rent, utility, garage expenses, blah, blah. I mean, again, this is all just, he's basically, he's getting, they're paying for his, for a place for him to park his car and live, okay, in New York City. That's what it sounds like. He did not pay taxes on probably $100,000 of compensation a year. So they're saying all of this stuff that they paid for him was about $100,000 a year, and he should be calling it compensation. And they're saying for the tax year 2005 to 2017, the corporate defendants provided Weisselberg approximately $1,174,018 in untaxed income resulting from the payment of his rent and related expenses. So they're saying over the whole period of time, that's what they paid him. Now, if he lived there as his primary residence, and from that long, if that was really his primary residence, and in New York City, whatever he did is not in line with the rules of residency, et cetera, et cetera. I mean, it could be an issue. It could be an issue for them, and they may have to be paying some taxes here. I can tell you that this is not atypical to see a taxing authority make this sort of move against a taxpayer to recover taxes. I don't typically see it in an indictment. It could be that they're under audit or something, and one of the representatives of the taxing authority sitting in New York assesses a tax, and then they collect the tax. They're saying that not only does he owe this tax, we have evidence that he did it intentionally and conspired with others to do it. I'm not saying they have evidence or don't. I'm just saying the only situation I could think of is that where they would indict you for that instead of just coming after you to collect taxes would be, you had intent for financial gain, as far as I know. All right, so now we go to number 8. We're still on page 6. Defendants concealed, failed to report, failed to pay income taxes. Some of this stuff goes on, talks about some of the stuff that I've already said. Basically, he was in New York City, living in New York City, and he was a resident there. He was not paying New York City taxes that he should be, and that's a big no-no, and we think he is a bad man. By concealing the residency from the tax authorities withholding, he evaded $210,000 of taxes. Okay, again, they're saying that he owes taxes on this. Again, the difference is if he was intentional in defrauding and things versus not knowing or not agreeing. If he may not agree with, or he might have a tax firm that works for them that said, we qualify here. You don't have to report this on your individual compensation. Maybe they're in hot water. I don't know. They could be in hot water too. So, but there's no they're not saying, there's nothing in here that's like there's any embezzlement or misappropriation or anything of that. They're basically saying, we think he owes taxes to New York City because he was living there and he was receiving this. We think it should be called compensation, not rent expense for the corporation. And because he intentionally covered it up and conspired with others to do it, it's technically a crime. Okay, that's what I've read so far, or at least my understanding. So now we go to page 7. Payment of tuition expenses for Weisselberg's family members. Private school in Manhattan. Okay, so when I read about this tuition for his kids, what kind of comes to mind is, it's not unusual for, if it's a key employer, key executive, to live far away from corporate headquarters, especially the CFO or the controller or both. that the CEO and owner and stuff wants him close, right? So it's, he might live in Jersey or somewhere else that's not quite as expensive, and not in New York City, and he doesn't want to live in New York City. It's too expensive, et cetera, et cetera. Remember, this guy's a CFO, but he didn't come from. Doesn't sound like he came from like the Ivy League high-powered investment banking background and just slid into the CFO role. It sounds like he started with them in 1973 as an accountant. Could be a very humble guy. Could be very cost-conscious, and so doesn't want to spend the money to live in New York City. And other people in the Trump organization or Donald Trump himself, I don't know, said, I need you here. I need to talk to you a lot. And so I need you to come live here in the city. And I'm going to pay for it. Now, this $100,000 that they're talking about that they paid on his behalf, or that they paid for his apartment, there's nothing in here that talks about how much he paid for it. Okay, so if he had a Manhattan apartment or place to live, I'm assuming it's pretty expensive. I mean, I didn't think you could live down there for $100,000 a year, and now that's including rent, utilities, garage expenses, all kinds of stuff. So it could have been that they said, "Hey, look, we can justify us paying for $100,000 a year and write it off on our corporate taxes, and the rest has to come out of your own pockets, and you have to pay for it." In other words, it's you have to pay for the same cost that you would pay for where you used to live, and we'll pay for the additional amount. So, if it costs you, I don't know, $50,000 a year to live where you're living, and the apartment downtown Manhattan is $150,000 a year, we'll pay $100,000 a year, and you pay $50,000 a year, right? So there's nothing in here that talks about him, the Alan Weisselberg, paying anything. He might be paying for it, and they might just be paying the increase in cost for him to move to New York City. I don't know. But that's not atypical, okay? And it's not atypical for them to separate it to say, we're not going to pay the whole thing. We're only going to pay the portion that is not considered compensation and considered a benefit to the business, Trump Corporation, and we're going to call it rent, okay? All right. Let's see. Reading on indirect compensation for tuition pay. So they're saying that the Trump organization was paying for the colleges of the CFO's children, and they're saying that should have been treated as compensation to him. In other words, he benefited from it. He should be he should be paying taxes on that as compensation. I don't know. Since he's been with the family for so long, I assume that. I mean, assume, but it could be a scenario where he's obviously been a loyal person to probably Donald J. Trump, I'm sure, and also the whole Trump organization. And so, for a company to take care of somebody with that kind of tenure, or to pay the tuition, or pay the tuition for the children because they went to public school before and now they live in New York City and they don't like any of the public schools, so they're going to send them to private school. Again, it could just be that he's, the corporation is paying for expenses that are additional expenses that the CFO wouldn't have incurred had he not moved, right? Or it could just be a thank you for being a loyal person to the family for this long. Who knows? Should it be considered compensation to him? I don't know. That's a tax determination. I'm sure they got advice that said that it wasn't compensation, that it qualified as a corporate expense, but I don't know. So we'll see. But it's not unusual, and it's certainly not atypical for that to happen. Let's see. But basically, they're saying that because you had control, I think what they're saying is because you had control over the money and control over the checks, that basically it's your fault. You were just enriching yourself, right? Which, in an organization like this, those are not calls that I would think he'd be making on his own. I mean, those are things that are awarded by either a compensation committee or a board, or the CEO himself, whatever the acting CEO or president is, would approve that. So I don't think he was making these decisions unilaterally. That would surprise me. Let's see. Also, they go on page 8, payment of leases on Mercedes-Benz automobiles. Same concept here. I don't know. I mean, the Mercedes-Benz automobiles, can you say that this was, um, because you moved to New York City? I don't know. Um, I mean, certainly you have a car where you used to live, and now you live in New York City. You still need cars. I don't know. You know, this one to me would strike me as, is unless they can, really show that, it was for a business purpose, they may have an issue here. I'm not sure. One thing you have to keep in mind about compensation, especially as it relates to a corporation or C Corp, is that a C Corp pays its own tax, okay? So there's nothing that I'm reading that's going on that says that there was unreported tax as a whole, okay? What they're saying is that one entity paid tax and this person didn't, and they should have, right? So it's not that necessarily that any organization here got hosed. It's more of they misclassified some of the stuff, and this individual. So far to me, it looks more like they're going after the CFO than they are Trump organization. Okay, for whatever reason. I mean, it just seems like he's the target of this. Okay. Page 9, the receipt of unreported cash. So this is interesting, okay, because now the receipt of unreported cash, this gets into stuff that isn't really typical necessarily, okay? So it says here that he caused the Trump Corporation to issue corporate checks made payable to a Trump organization employee who cashed the checks and received cash. So petty cash. You ever heard of petty cash? Could be that. I don't know. This cash was given to Weisselberg for his personal use. The Trump Corporation booked this cash as holiday entertainment, but maintained internal spreadsheets showing the cash to be part of Weisselberg's employee compensation. Now, do people take out cash to have a holiday party? Of course. Happens all the time. Did he get a large amount of cash and keep it, not spend it on anything, and not report it? I don't know. I mean, as far as I know, that's, it should be employee compensation, right? I mean, I don't know what the amount is. It doesn't say what the amount is. They have the total amounts. I don't know. They're saying in the period of 2011 to 2017, he did not pay taxes on approximately $29,400. That's a 6-year period, so about $5,000 a year. So he $5,000 a year. He took out cash for a holiday party and didn't give it away to people like he was supposed to. Maybe, I don't know. I mean, again, that seems like a low amount of money to kind of evade taxes on, but maybe. But yeah, it is true that if a company gives you cash, especially if they write it off as an expense, if you get it, technically it's compensation to you. Okay. I don't know if that's the fact pattern here, but that's how it works in a general sense, in theory. Okay, so then you go to see about on page 9, number 12. As a further part of the scheme to defraud, Weisselberg occasionally submitted requests that the Trump Corporation pay for personal expenses for his homes and for part of maintaining one of his children. Okay. Well, even here it says that he submitted requests, right? So we know he's not approving his own stuff. Let's see. Furniture for his home in Florida. Okay. Makes such requests. So he has another home in Florida. Okay, so that makes me think that maybe he's claiming residence in Florida, and New York City's trying to claw that back and say, no, you live in New York City. Okay. So he might very well be saying, hey, I live in Florida. I don't even know what they're talking about as far as me living in New York City. Okay. It might just be that when he has to go to New York City, he stays in that apartment, and maybe other executives do too. Okay. I don't know. Let's see. Trump organization issued checks for expenses. Okay, fine. Forms, no income tax withheld. Again, this seems like really another scenario that they're putting forth, but nothing unique as far as what they're claiming he was doing. So again, it's back to he's receiving benefits from the company, and we think it should be compensation to him that he's paying personal income tax on, but he's not. And keep in mind that if it's personal compensation to him, and it means that the compensation comes to him, and he also runs the risk of something called unreasonable compensation, which means if a C Corp pays out too much to somebody, they get to deduct all the compensation they pay out. So a C corporation can deduct all of the compensation it pays out to people. And remember, a corporation pays tax, so they will pay less tax when they pay out to other people. Sometimes C corporations have a lot of profit and they don't want to pay tax in that corporation, and so they pay huge bonuses to the executives in the form of W-2 compensation. Sometimes the IRS comes in and says, that's unreasonable compensation, way too high. You should not be paying that much to them. We're going to tax you on the unreasonable amount and not let you write it off. So it could have been that they were up against a wall that said that they couldn't pay him any more and still deduct it. So, they were trying to, I don't know, it gets to be a little gray in that area where it's not necessarily that they don't want to classify as compensation to him. It's that they're afraid the IRS will not let them call it compensation to the person and come back and put penalties and interest on the amount, right? So believe it or not, sometimes the IRS comes in and says, nope, you can't consider that compensation. They've already made too much money. We're going to reverse all that and put it back in the corporation so you pay tax on it. Okay, so it could be a scenario where they were trying to not do something wrong, and now they're getting, dinged for it or accused of it. Let's see. 2 other members received. It looks like they're talking about other people not receiving things other than Weisselberg. Let's see. Now, it gets a little bit more into kind of a conspiracy talk about how they're working together. And again, I don't think conspiracy is a bad word or a silly word. It is what it is. People working together, which happens all the time. It is a conspiracy. That's what they're claiming, though. Again, they didn't pay New York City income taxes. Misreporting of employee compensation is non-employee compensation. This is page 11, number 15. Defendants misreported portions of the employee compensation paid to certain Trump Organization executives, including but not limited to Weisselberg. Specifically, it was the practice of the Trump Organization to compensate certain executives by paying a yearly salary and discretionary end-of-year bonus. That's typical. The salary, in most instances, a portion of the executives' end-of-year bonuses were paid to the executives by Trump Payroll Corp., reported to federal, state tax authorities, blah, blah, blah. Okay. Substantial portion of year-end bonuses were on checks drawn from Trump Organization entities. So other entities had occasionally paid these bonuses that were all owned by the Trump Organization. Okay. Then they're saying the end-of-year bonus checks drawn on entities other than Trump Payroll Corp. were routinely reported to tax authorities as non-employee compensation and set forth on United States Internal Revenue Service 1099 forms, which are used to report non-employee compensation. Okay, so, if you pay, if you have a W-2 employee and you pay them what's called 1099 compensation or contractor compensation, you're still reporting it as taxable compensation to that person. You're just doing it in a different form, okay? Was that right or wrong? I don't know. That's a gray area, and it depends on the circumstances coming forward, but it happens a lot. And, oftentimes taxing authorities ding people for that kind of thing. So, anyway. Now we're on page 12. It's talking about how he was putting money into a Keogh plan, which is like it's like a private kind of retirement plan, a pension plan. It's available to self-employed people. They're saying he was not self-employed, and so therefore he doesn't qualify, et cetera, et cetera. But he was putting money away in it and receiving benefits from it. And they're even involving some other entities in it, saying that money was coming from other entities. Let's see, the amounts contributed for tax years 2012 through 2016 exceed approximately $215,000. So again, there's no There's no laundering or embezzlement going on. It's excuse me. They're just saying that things are being misclassified. They're saying he knew they were improper, that the CFO knew what was going on was improper, and he let it go on anyway. And it was part of the scheme to defraud. Excuse me, I apologize. Bottom of page 12, falsification of records by the Trump Organization, accounting department. Oh man, you better be careful going after accountants. I'm sure there's a lot of people in that organization that would take offense to doing something or being accused of doing something wrong. Let's see. Now on page 13, his annual compensation was fixed. Let's see. So he had $940,000 fixed compensation from 2011 to 2018, 540 base salary, 400,000 year end of year bonus. Excuse me, I'm gonna get a little drink of water and I'll come right back.